Target shares up just over 2% after reporting fiscal Q4 earnings this morning, showing some growth over the holiday season, but warning it could see a slowdown. CEO Brian Cornell saying that it continues to be a very challenging environment. And Target's CFO joined Yahoo Finance earlier today and shared a similar sentiment.
We see a consumer that's leaning into some of those seasonal moments. We're pleased with results in Valentine's Day, but we're mindful of the trends that we saw emerge in the fourth quarter, and we think it's appropriate to plan cautiously in that environment. There's some uncertainty as we look out and see what 2023 might hold, and we want to make sure that we're planning prudently against that backdrop.
Now, he went on to say Target is focusing on getting that inventory story under control, which they are showing the numbers in favor of that somewhat, but it's going to be a challenge given how we're seeing Walmart continue to chip away at their business, in particular, some of those high-income shoppers, which has been a real surprise in the latest quarterly results, Shauna.
Yeah, Dave, it certainly has been. When you take a look at those quarterly results, stack up Target, compare that to what we saw from Walmart, and the difference that we're seeing in terms of comp sales, Q4 comp sales for Target, you're looking at it on your screen, up just about 0.7% compared to a more than 8% jump that we saw at Walmart. So you certainly are seeing more and more consumers trading down maybe to Walmart. So Target has to do something at this point. They are taking some steps to launch some of more of their own brands. They're launching more than 10 own brands, among them, or expanding those. Cat and Jack, which is the kids line, something I use all the time, certainly on the lower end of the price range, but you get a lot of bang for your buck. That has certainly worked for its consumers in the past. And Dave, they're also going to be adding more items, offering more items in the $3 to $10 to $15 range, which maybe that will do the trick and help them get more consumers through their doors.
Yeah, the private label brand Target and Walmart have in common. You're seeing everyone really go to that move. Amazon's doing it. Kroger is doing it. Costco is doing it. Everyone launching their own private label brands, in particular because they were up 11% overall in 2022. And for Target, they far exceeded that, up 18% in terms of their private label brands. So that is clearly an advantage they seek to take more advantage of. Consumers' spending habits have indeed changed, and that's what Brian Cornell talked a lot about. Discretionary spending down 13%. So you're really seeing people pull back when it comes to home and apparel. They continue to spend on food and beverage. And the one right in the middle, Shauna, that almost seems like we have to ask ourselves if it is a discretionary item is cosmetics, makeup. People do continue to spend on those, which almost feels like a staple at this point based on what we've seen from some other retailers.
I would consider it a staple. I think it's a necessity for everyday life. But hey, that's just me. So I think it makes a lot of sense that people continue to buy those products. Also, Target relying a little bit more heavily on its loyalty program, making some improvements there, saying that they're going to try and make it, quote, more compelling promotions and improvements there to try and help get that return customer, which we know is so critical, especially in times of uncertainty like this.